Hello everyone and welcome to Day Trader S&P 500. Today is Friday, October 7, 2022. This is Dale Woodson, editor of Woodson Wave Report, and we were looking for today, the 7th of October, as a turn date all week long. As some of our subscribers say, show us the wave count, we'll tell you the news. The wave count pointed to today, and the news was the jobs report, which is what they blamed it on after the market moved. And we were looking for this date in advance and looking for the market to move before it moved, instead of finding an excuse or a reason why it moved after the news came. We were looking before. Anyway, so much for that. Let's get into our analysis. We'll start with the Qs as always. We are looking at an hourly chart from that B wave high on August 16th, which came within a day or two at the most. Maybe it was a direct hit, I don't remember. On our turn date, we have a 1 down, as you can see here, a 2 up, and you can see 3 is extending. You can see the internal wave count in blue, and then we had a retracement right up to the 382, and here we go. That's that fourth wave we were talking about. A couple different ways you can count this. This could still be a 3 because it achieved the 1.0 and fell just short of the 1.272. And you can see again the NASDAQ or the Qs are lagging because the S&P went further than that. So a couple different ways to count that. Suffice to say, we're in wave 3 of 3 down in at least 2 degrees of trend, maybe as many as 4. We can get into that a little bit later. Let's check in with the US 10-year from that fourth wave low back in March. Okay, we are looking at a 1, 2, 3, 4 in blue. And you can see the 5 up there. We have targets. We reached the target where 5 equals 1 at 3.868. It went a little bit above it, dropped down. You can see our higher targets there. The 1.272 multiple is 4.434. The 1.414 is 4.623. And if we can get that in there, the 1.618 is 5.048%. That is quite a move from, let's get our weekly in here, back it up and look at the longer term. Okay, here we go again. That low back in March of 2020 ended 39-year bear market and interest rates from 1981. So from 0.333 to where we are is a huge move. And let's just see if we can get this in here really close, what we're looking at here. We are looking at 1,105% from 0.333 to that high right there at, what is that there? I'll get it right here. I think it's, it says 3.78. Anyway, it's higher than that. It's over to 3.86. So that's where we are in interest rates. They keep going up, up, up. Let me get this back down to a daily chart for my next time of referencing it. There we go. Okay, let's look at the S&P cash daily chart from the January 4th high. And we've got a low on 617 of 36.36 for wave A down. We've got a B wave up. We had a direct hit on a turn date, direct hit exactly on the 618 retracement for the B wave right up there, okay, in red. And then you can see the C wave down is beginning with a 1 down, a 2 up. And see here again, we're just short of the 1.272 for the third wave target. This should be a 1 down, a 2 up, a 3 down, a 4 up, and a 5 down, which would end wave C in parentheses. That's intermediate degree in red. That, believe it or not, is just the larger wave A. Primary with a circle around it. I didn't put the circle. I can. Let me do that. These are a little thicker than I like. But let me do this and make it red to correspond. Okay. That, and it's a long way to go, that gains equality at 3143. But that's just equality. There's a 1.618, 2.618, etc. lower, but this is still developing. We're in a third of third wave here. Okay, let's look at the EMinis. Again, we're looking at a daily chart, same wave count. We've got the A in parentheses or intermediate term low here on 6/17. We've got the B intermediate in parentheses up here on August 16th. Okay, and then again, we've got a 1, 2, 3 could be here. I put it there. It could be going further. Okay, you can see, you can count maybe a 1 down here, a 2 up, a 3, and a 4. And we'll get into that because we're looking at that most recent high a day or so ago as 4. Again, once this makes 5 waves down, that'll be C in parentheses or intermediate, and that will end primary wave A. What we'll get after A down is a B up and a C down. We got a long way to go. We're in the beginning of this bear market. That's the daily on the EES. We're going to look from, let me go back here, that 816 high on a daily. Here is the 816 high on an hourly. You can see there we've got a 1 down, a 2 up, and then here is 3 down. Again, I've got it marked here. There's that 4 I've been telling you guys about, is hanging around that 382 retracement at 338.02 and a quarter. And today it broke loose on our turn date to the downside as expected. Okay, we've got a long way to go for 5 right there. This is 5 at 33.76. Keep in mind, 1 lasted a Fibonacci 21 days. So if 5's anywhere near 1, as far as time goes, it'll last 2 or 3 weeks. Okay, this is not a target, this 33.76, that we're expecting to achieve anytime soon. It could, but allow for that time. Okay, I think that's, oh yeah, here we go with a 10-minute. Okay, and you can see in blue here we have a leading diagonal with 4 overlapping 1, a 1 down, 2 up, 3 down, 4 up, 5 for the larger wave 1. You can see our targets there. This is what I'm day end swing trading by. Looking for a change in trend at the lowest degree. I even look at 1 minute, but we won't get into that minute degree of trend. You can see here this thing is accelerating to the downside. I want to show you guys some picks here. We'll go back to the October 4th hourly chart that we put out to our subscribers. You can see where we had the Fibonacci time spiral on the bottom. We're looking for that to go a Fibonacci 5 days to 10.7. Actually, technically, it went Fibonacci 3 days to 10.5, okay? But there you can see the time scale on the bottom. There you can see where we're looking, 2-3 weeks out for this wave 5, okay? That was on the 4th. I think we have another one here on the 5th. Here's where we've got those wave 4 targets, okay? And that was hanging around right at the 382, and we're looking for wave 5 down. We wanted to allow for wave 4 to go up to Fibonacci 50% at 38.73, but wave 4 high cannot go below the wave 1 low. You see it over here, 38.83. That's the one in parentheses on September 6th. It held, and here is the make or break right there. We'll get confirmation that 5 is in play once the wave 3 low is taken out at 35.71. Okay, again, that may take some time. Let's see if we got another pick here for you guys. This is the one we put out today, this morning, right at the open. And by the way, it's Friday, a little after 9 a.m. Central Time. Basically the same thing with those targets. Okay, there you go. And I'll show you guys our, let's see here. There is our market open that I just referred to with all these. I want to show you guys, there's that same chart. I want to show you guys that we put out a couple days ago that wave 5 does not necessarily have to last a Fibonacci 5 days. It could last 3 days and top tomorrow on 10.5. Okay, this looks like exactly what it did. It hit that 38.20, okay, and then it made a slightly higher high at 38.20, but then again, there's our confirmations there. There's our wave 5 targets, okay. There's that reminder about the wave count as far as time goes. Again, in order of preference, we have wave count, number 1, wave price, number 2, wave time, number 3, okay. And you can see here, here's we had those couple different Fibonacci's going out as far as time goes. Looks like 4 topped on 10.5, and we're in wave 5 down. Okay, so let's, without further ado, let's go back to this hourly. That's That's the nice one there. Okay, so we had a 1 down from the 8/16 turn date, a 2 up, okay, and then a 3 down, and then looks like 4 top there. We'll get verification with a break below the wave 3 low. We'll see what the rest of the day brings. Exciting day, turn date, and we're all relatively happy, I assume. Okay, and until next time, take care, everyone.